Greetings, members one and all of the Salivation Nation, gold and silver plunge, as the market hears what it wants to hear. Let's explore! It never ceases to amaze me how much psychology plays a role in the market, all the way around. For many of us, we want to be positive. We don't want to think about the bad at times. And many times it's to our own detriment, because if we don't prepare for the bad, well, we're going to be in a world of hurt at times. And it's not that we shouldn't think positive. We should, but we should also be realistic. And what's happened today with the metals, I think, is as a direct result of the market hearing what it wants to hear and kind of dismissing what we all know is coming, even those who are in the market. And based off of a statement that the Federal Reserve Chairman has said, and you've heard me talk about this in the past, how when the Fed chair speaks or when the president speaks, well, that can move the markets. And that's what's happening now. But psychology is a very powerful thing. And I make reference to that because here you can see this link here to an interview from Christopher Mullen. He is a technical analyst, and I did an interview with him as well, as he has been interviewed on Kitco and other platforms. And he removes all that psychology, all the emotion. He just takes a look at the numbers and the patterns and where it's going based off of those numbers and the patterns that are reflected therein. But I find fascinating what can happen and what is unpredictable, and that is the emotion. That is the psychology of the markets. And we're going to talk about that here as the gold prices have dropped below $1,700. And you can see, moving back again, that why am I calling this a plunge? Because for all practical purposes, this has been happening for the last few days. The price of gold has gone down even a week or so. Many of us were expecting it to kind of level out or to fall for momentarily, but then would start to pick up steam again. The Congress is about to pass and sign into law this $1.9 trillion stimulus package, which likely is going to go past the Senate as of right now, as of the recording of this video, with the tiebreaker being Vice President Kamala Harris. So we'll see how that plays out. But nonetheless, that's $1.9 trillion, with about 9% of it going for COVID relief, the rest of it going for bloated government spending, again, more and more of it. And but nonetheless, how will the markets react to that? Well, it could mean that they're excited about it, and gold and silver could decrease even more. But in the end, it means more dollars going to be created out of thin air, which is going to devalue the dollar, which is going to be good for gold and silver. But we're talking about what happened today, and there was a statement by the Federal Reserve Chair. Gold prices dropped below $1,700, and so that's a pretty big drop over the last few days. But this biggest drop here, especially for silver took a pretty big hit here. The gold market did not find much love from Federal Reserve Chair Jerome Powell as he continued to dismiss rising inflation pressures and bond yields. Thursday, speaking at the Wall Street Journal Jobs Summit, Powell said that while inflation is on the rise, he sees the move as a transitory and a one-time event. He added that long-term interest rate expectations are well anchored at 2%. He says there is a difference between a singular surge in inflation and a persistent rise. We will use our tools to make sure inflation is anchored at 2%. Well, I tell you what, they're tools, huh? You think they can stop it or whatever? They're going to do whatever they can, smoke and mirrors, tricks up their sleeves. Most people feel that the Federal Reserve Board and the policies of modern monetary theory mean that they themselves are the tools that are implementing their tools. And because they're doing a disservice to the dollar and to the economy as a whole with these quick fixes or what have you, because they really don't care. They're living for the moment for now. but they also know that probably there's going to be a reset coming, and so they're betting on that to save them for the practices that they're doing now. There is a bit of hubris and the understanding that the dollar is the most powerful currency in the world, but that could still come back to bite us, in a number of different ways. It could happen very, very quickly. We should not discount that in due course. How long will that take to occur? I don't know, but the path we're on, we are speeding that up. He was also dismissive on the rise in bond yields and suggested that it doesn't signal that the central bank will be raising the interest rate anytime soon. Yields for 10-year Treasury notes have spiked higher following Powell's comments, which is helping to push gold prices below critical support, around $1,700 an ounce. April gold futures last traded at $1,696 an ounce, 70 an ounce, down 1% on the day. According to some analysts, Powell's comments on bond yields could continue to be negative for gold prices. He said that it would take more than just a rise in bond yields for the central bank to adjust its monetary policy. While the rise in bond yields attracted his attention, he said that monetary policy is not based on one number. I would be concerned with disorder in the financial market or unwanted tightening. It's not about one particular price, he said. According to some market analysts, Powell did not provide any new information or forward guidance regarding monetary policy or economic outlook. Well, other than saying he's got more tools in the book and in their chest to be able to handle it, we'll see. But they're not going to raise interest rates. He reiterated his outlook that the Federal Reserve is a long way from its goal of achieving maximum employment and average inflation of more than 2%. Looking at the labor market, Powell said that it would take more than a low unemployment rate to signal full employment. Although Powell was quick to dismiss rising inflation pressures, some analysts noted that he is still not in a hurry to raise interest rates, which should provide some support for gold. Yeah, he's not going to. They're not going to raise interest rates at all. Powell said that he learned 2 lessons from the COVID-19 induced economic turmoil that started a year ago. When you have a real crisis, act quickly and don't hold back, and don't stop until the job is done. But what they're doing is doing more harm than good, in my view. Axel Merck tweeted, risk appears to be on the downside. We need to guard against those downside risks, meaning not even think about the removing accommodation until we are through the pandemic. But when will we be through the pandemic? That's the question. You have Fauci and others saying that it could take another year. We'll be on masks for quite a long time. Some states are starting to rebel against that now. Texas, Mississippi, and Florida are hinting at opening up and not requiring masks. But nonetheless, we'll see how that all plays out and how this coronavirus has been politicized since its inception. There's no sign of that slowing down for sure. But there we go. Silver is now down under $26.70. Took a pretty big hit here. And platinum is down $39. Palladium even took a hit there, but $25.48 for silver. It's risen the gold to silver ratio up to almost 67-1 now. So that's a pretty big hit for silver, especially considering the squeeze that's going on in the physical. And I think that squeeze is still happening, hence why the premiums are so high. And that will continue to be how some will look at this as a bargain hunting, because even though the premiums are high, there will be some decrease in the price, is my guess, even though it won't fall as much as as what the spot price has fallen here. In other words, just because it fell 69 to 70 cents an ounce, you may save 30-40 cents on the premium, but we'll see here how that plays out. Nonetheless, gold and silver continue to baffle us and their movement in the markets, but in many ways, are we going to have to just ignore the spot price and find ways to deal with this and accumulate these precious metals, understanding that the premiums are high? I see gold as a buying opportunity, as its premiums, though higher, they're not quite as affected as silver premiums are. So it really doesn't change my calculus. I'm still accumulating gold, but understand that I am paying a higher premium these days for gold, as these metals are in demand. Or will this flake off some of the people that have been buying and said, okay, I'm out. The price keeps going down and I keep buying. This is foolish. This is foolish to pay these high premiums that I'm not going to recover. I don't know. There's a lot of different viewpoints out there on this, and this is why I try to keep somewhat of a neutral stance. I am for the silver squeeze as long as people understand what they're doing, and I'm of the understanding, especially with these new stackers, that sooner or later this squeeze is going to end. And where will you be? Will you be left holding a bag of silver that you may not get the premiums, especially if the silver drops? And how long will this last? It's got to be sustained. Somebody in the comment section of my prior video said that APMEX CEO was interviewed somewhere that it could have an effect on the market, COMEX and everything, if it's sustained at the levels where it is now for up to 9 months. And I think that's a pretty conservative estimate, that it's going to take at least 9 months of this. I think longer. I think it could take longer. So in other words, sustained buying by the community for this month before something, quote, breaks. We'll see, but it is certainly getting down into the close of fine gold and fine silver. We'll see how it plays out. These metals are fascinating, and seeing where the prices are. If you can find bargains with a dip, hey, it's a good time to buy. Look, gold just now, during the course of this video, is now above $1,700. It's providing some resistance there. So I'm not in a position where I can buy right now. Boy, I wish I was. I made a couple of purchases somewhat on what I thought was a dip. Didn't think it would dip anymore, but I'm going to hold off and wait until I can get some more capital to make another purchase. Hope it keeps going down, at least from a buyer standpoint. So there you have it. Let me know what your thoughts are on the market, and do they hearing what they want to hear? If that's the case, then it is a buying opportunity. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.